I suspect, despite all of its flaws, that the U.S. government will, for the rest of my life at least, remain uh, the world's reserve currency, the world's settlement currency. I'm not arguing that that's a good thing, although as an American, for me, it's a wonderful thing. The idea that we have the benefit of seigniorage and we can export our idiocy to countries around the world who have no alternative because the other forms of idiocy are greater. For me, that's a wonderful thing until it ends. Where I go is that I continue to save part of my liquidity. And by the way, I believe in liquidity. I continue to save some of my liquidity in gold. I don't own it because I think it might go from 2,000 to 2,275. I own it because if faith in the system gets shaken, I'm afraid it's going to go to $8,000 or $10,000. I'm afraid that we revisit 2008 in some fashion. What would cause it? I don't know. I'm not that smart. And I also maintain US dollar liquidity, but in very, very, very short-term instruments.
In this clip from Rick Rule's interview, he delves into the looming concerns surrounding the American political landscape and the potential ramifications for global economies. Rule highlights the growing distrust in traditional currencies, particularly the US dollar, amidst geopolitical tensions. He emphasizes the significance of gold as a safe haven asset in times of uncertainty, expressing a belief in its potential to soar to unprecedented heights, possibly even reaching $8,000 or $10,000. Rule's prudent approach to investment, focusing on assets he comprehends thoroughly, serves as a valuable reminder for us to assess our own strategies amidst market volatility.
I think many entities, governments, corporations, and individuals are concerned about the overreaching nature of the American political machine. I myself like to save outside dollars, just in case, and I'm no government. Certainly, as I say, while the governments trust us less and less, for good reason, they trust us more than they trust each other. And certainly the move to gold, I think in many senses, represents, first of all, their understanding that getting paid a negative interest rate and assigning seigniorage to a country like the United States that's trying to exert undue influence is both stupid and negative. I think they also understand that if they are going over time to utilize a medium of exchange that isn't the US dollar, that gold is the only one that they can do it in. I notice, as an example, the BRICS currency, which many newsletter publishers are selling circulations on based on the fact that it's going to destroy the dollar. My suggestion is that's absolute hogwash. Doug Casey again. The dollar is an IOU nothing. The euro with 17 or 18 countries is a who owes you nothing. The BRICS is a nobody owes you anything. Can you imagine a fiat currency that would operate between, as an example, India and China with open hostility on their borders? Can you imagine the Chinese running a large trade surplus with the Russians and presenting a bill at the end of the year for settlement? This is all silly. I suspect, despite all of its flaws, that the U.S. government will, for the rest of my life at least, remain the world's reserve currency, the world's settlement currency. I'm not arguing that that's a good thing, although as an American, for me, it's a wonderful thing. The idea that we have the benefit of seigniorage and we can export our idiocy to countries around the world who have no alternative because the other forms of idiocy are greater. For me, that's a wonderful thing until it ends. Where I go is that I continue to save part of my liquidity. And by the way, I believe in liquidity. I continue to save some of my liquidity in gold. I don't own it because I think it might go from 2,000 to 2,275. I own it because if faith in the system gets shaken, I'm afraid it's going to go to $8,000 or $10,000. I'm afraid that we revisit 2008 in some fashion. What would cause it? I don't know. I'm not that smart. And I also maintain US dollar liquidity, but in very, very, very short-term instruments. I understand completely that I'm getting 4% in a currency that's depreciating at 7, that I'm losing 3% of my purchasing power a year. I consider that negative interest rate personally to be an option premium, so that if the liquidity squeeze that I'm afraid of occurs, that I will be able to take advantage of it rather than being taken advantage by it.
Okay.
And I'm tending, I've actually tended towards this for 40 years now. I tend to invest in things that I understand very well. I'm not tempted, as an example, by consumer product stocks because I don't know anything about them. I'm not tempted any longer to invest in categories that I don't understand well. That means that I miss out on a lot of stuff, but that's okay because I think I miss out of catastrophic losses due to my own ignorance. I think that's a wonderful trade. So when you ask, what do we do? I think everybody needs to decide for themselves what they do. I can only tell you what I do.
Continuing the discussion, Rick shifts focus to his perspectives on silver as a speculative asset within the precious metals market. While acknowledging the narrative's dependence on gold, Rule underscores silver's potential for faster and more extensive gains. As a self-proclaimed speculator motivated by fear rather than greed, he emphasizes the importance of maintaining a balanced approach to investments. Reflecting on the broader financial landscape, Rule expresses concerns about escalating debts and potential consequences for global economies.
I see silver as a more speculative asset, and I own some. Usually gold leads a precious metals bull market. The narrative has to be established by gold, but when silver follows through, it goes further and faster. I am a speculator. The money I now invest carefully, I made by speculating wildly, and I do own some silver, but I own a lot more gold than I own silver because I'm motivated at present much more by fear than by greed. I'm interested at these conferences to talk to gold bugs who rub their hands gleefully and chortle about the fact that gold could go to $6,000 or $7,000 or $10,000. The circumstance that would cause that would be so damaging to the rest of your portfolio and to your lifestyle that it isn't something that you should be happy about. My lifestyle's really good. And I hope, however old I am, David, when I shed my mortal coil, that right before that I look back and say, you know, all that insurance you bought, all that gold you held was a mistake. Because that means that I lived a peaceful, uneventful life, which is what I would prefer to live. I'm concerned about the arithmetic around the world's finances. I'm concerned about the debt. You know, the big thinkers say we owe it to each other. Well, that's not true. The spenders owe it to the savers. And at some point in time, the spenders are going to have to renounce. They are either going to default honestly, saying times are tough, we're not going to pay, screw you, strong letter to follow, or they're going to inflate away the obligation. But in either sense, an actual or a tactical default, there will be consequences. There'll be consequences in liquidity. There'll be consequences in confidence. There'll be consequences in politics. I don't know what they'll be. I'm not an economist. I'm not a political scientist. I'm a credit analyst and an investor and a speculator. So all I can do is prepare myself psychologically and financially to do my best to be available in all sets of circumstances. How I do that is going to be different than the way that, you know, somebody else might do it. If there's somebody who is a, you know, an electrical engineer or something and is up on all these latest technologies, he or she may be better able to speculate or invest in enhancing other people's lives through technology. It might be a viable investment strategy for them. It's not for me. I can't pronounce most of these businesses, let alone understand them. The actual success of technology in changing people's lives and the reward to the proprietors of those technologies has been spectacular. And I think there has been disintermediation from traditional performing sectors, including extractive industries, to technology. I also think that the mining industry in particular deserves its poor favor. If you look back to the decade 2000 to 2010, the gold price, if my memory serves me correctly, ran from about $256 to about $1,900. A handsome move.
Mm-hmm.
And the free cash flow per share on the Philadelphia Gold and Silver Index, the XAU, fell. Now, it took real skill for an industry to generate lower cash flows at the end of a decade where the selling price of their product increased sevenfold. That's a miraculous achievement, and one that investors haven't forgiven them for yet. If you extend that to what I laughingly call the penny dreadfuls, the juniors, it's important to note that if there's, let's say there's 2,500 of them worldwide, I don't know what the number is, companies that are or purport to be in the mining business or the exploration business. If you merged all those companies into one company, we'll call it Junior Explore Co. That company, expenditures minus sales and takeover, stuff like that, in a good year would lose $2 billion. A good year, ironically defined as one where they couldn't raise money. In a bad year where they could raise money, it'd lose $6 or $8 billion. So what should I pay for this company? Should I pay 7 times losses? 10 times losses? If gold price is rising, should I pay 15 times losses? The truth is that the junior industry as it sits is unviable. What's lovely for a speculator like me is that headline fact obfuscates, I guess, hides the fact that 5% of the companies in the sector generate such spectacular value creation that they add legitimacy and sometimes luster to a sector that loses between $2 and $6 billion a year. If you invest in the mining sector, you will get poorer. You will absolutely get poorer. If you ignore the sector and invest in companies, you will do as I have done over 5 decades. You will get markedly richer in fits and starts. What's important is 2 things. Stock selection is important, but the other thing that's important is a contrarian attitude. You have to invest in the sector or in subsectors when they are out of favor. This is a capital-intensive, cyclical business.
As we wrap up today's insightful discussion with Rick Rule, let's recap the key takeaways from the transcript. Rule emphasizes the growing concerns surrounding the American political landscape and its impact on global economies, highlighting the importance of diversifying investments, including holding gold and maintaining liquidity in US dollars. He also shares his perspectives on silver as a speculative asset and the challenges facing the mining industry. Rule's prudent approach to investing, based on understanding and contrarian attitudes, serves as a valuable lesson for viewers navigating today's financial landscape. Thank you for joining us today. If you found this discussion informative, don't forget to subscribe to our channel for more insightful content. Remember to like this video and share your thoughts in the comments section below.